Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 41st report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. As you can see, we have the S&P 400 on top of our list with a 15% change in commercials positions. You can see that change over there. A bit larger than average, but nothing too unusual. Nevertheless, it is the largest change amongst these markets I'm showing you, so it could be taken into consideration, especially when prices are so high. Of course, you should be very cautious with indexes these days. Jumping to the 5 years chart, you can see that the extreme is definitely closer to the bearish side of the market, and not surprisingly at such price levels, of course. Jumping to the next market, which is the S&P 500, you may see a very similar picture. 13% change in commercials positions, 14 in large speculators. Again, a bit larger than average change size, but nothing too unusual. Jumping to the 5 years chart, you can see that here the extreme is not as bearish as in the S&P 400, although still closer to that side as well. Crude oil is our next market with an 11% change in commercials positions. Again, we're talking about a bit larger change than average, pointing upwards, so the change here is a bullish COT change signal. But as you can see, prices are, well, at least last week, at their highs, so maybe it's not the easiest signal to take. Jumping to the 5 years chart, you may see that the extreme is more or less in between the bullish and the bearish one, a bit closer to the bearish side. So in my opinion, I'd be looking for other markets, better opportunities. So let's move on and have a look at the large speculators COT Extreme signals. We've got the euro on top of our list with a 335 report extreme in the market. Here we go. You can see this extreme. It is an unquestionable bearish COT extreme, but it was there for the past couple of months, actually. You can see that things have not changed dramatically. Of course, price did not fall back to that extent either, so this can still happen. So the bearish extreme is there. Prices may actually start to move south direction. Canadian dollar is our next market, 257 report extreme. As you can see, the extreme is still widening, although very, very little, as you can see. And you can see that prices have stopped declining last week. Nevertheless, this is a bearish extreme, and you can see that the bullish extremes are very, very far away. So these extremes that would give us a unquestionable bullish bias are not there in the market right now. So we're still closer to the bearish side. Next market, last market for the review, is the natural gas, where we have a 45 report extreme. Not large, and as you can see, it is not a significant extreme, but it's the third in the row, so we're going to open and check it. Basically, you can see that the last major extreme in this market was a bearish one back over here a couple of months ago. You can see prices from that point declined, but not to a level where we can talk about a bullish extreme or anything bullish. So similarly to the crude oil, I just push this market aside and move on and have a look at other opportunities. And opportunities are there. Of course, the COT review focuses only on 6 markets. It's really just a short review. You have to analyze all the markets to find the best opportunities. So I advise you to really go in depth to this service, COT Base, where we offer you this very complex analysis system. The page I'm showing you. Of course, you can look at new COT report types, other data types. You can do your historical analysis on older reports, look at all the markets we have, and of course you can look at the long-term trend, volume and open interest scores, the COT index, and by checking all of these, you're definitely going to get a more precise picture about the markets. Have a great weekend. Take care. Goodbye.